But we have Anirudh Garg joining in with us from Invasset PMS today to discuss the market fundamentals, his top sectoral picks. Anirudh, good morning. Thank you so much for joining in with us. It has been too much news flow that we see coming in on the geopolitical tensions front. Every weekend there is something new. There are so many comments that come in. In terms of market, how are you seeing this now? Do you think that, we have penciled in the worst and maybe this range-bound situation is where we could see the Indian markets move in?
Hi. Firstly, a very good morning for having me. I think we are in a structural bull trend. The run that started from 22,000, I think in 1.5 years should take us above 30,000. My stance has been very, very clear from the start. And I think, I remind it again and again that there's an old saying in the market that the bull run, a structural bull run, it feeds on bad news. So whenever there is such a bad news, I think we will make a good range as you were talking. We'll have some correction. And I think all of them are buy on dips to, why does the equity market reward us? I believe just because of two things. Firstly, you bet on extraordinary entrepreneurs. You bet on relative change. And the second thing is you buy when others are not, when there is fear in the market. So all these opportunities, these all fear situations, panic situations, these geopolitical situations, these are all, I would say opportunities to make money in the market now.
Anirudh, good morning. Thank you for joining in. So in this fear/pessimistic market where nobody is looking to buy, where are you buying? Where are your preferences? Where are they like?
Okay, so we have not changed much from the last time we talked. So maybe a couple of months back, around 1.5 months back, our top pick was defense. It's not just because of what is happening right now. It's because of the global order that is changing. Yeah, every country needs to be self-sufficient now when it comes to defense, because overall the structure of the world in the past 1.5 years has changed. Second relative change that we see is the stock market intermediaries. We believe that the India has surely shifted from a lot from the FD culture, if I may say so, to the equity culture. And bringing such a change is not something that has happened overnight. SEBI, AMFI, or mutual funds, everything, all these people have worked really, really hard for the last 2 decades to make it happen. And being such a multifaceted markets where we have something like a Tata Steel from Tata Group and Tata Consultancy Services also, we encompass both old economy and new economy. And I think the Indian investor, the saver, has realized it. And these companies were given cyclical status maybe till the last bull run. But now, since the relative change is so strong, these companies have now given a re-rating. And I believe till the NSE IPO comes out, the valuation here should rise. Also, now, then there are smaller changes like the import duties on chemicals. So the chemical sector, the fertilizer sector, prices are going up. Yeah, so we like these sectors.
Okay. Anirudh, just a thought coming in even on IT. I want to understand what side of IT do we, what one could expect. Do you expect it to do well? And then in that, which side of IT? Would it be mid-cap, large cap? What are we expecting here?
Okay. So firstly, see, money making and market generating alpha in the market is a game of a particular company or a sector can be right. But are you seeing bigger relative changes happening? Because ultimately money flows to that segment or that sector where the relative change is bigger. I do not see any big relative change happening in IT at all. So we have zero exposure to IT. No mid, small, large, nothing.
What about IPOs? Anirudh, you just briefly touched upon the NSE IPO. There is a large IPO that is lined up this week, that of HDB Financial. Do you believe that such large IPOs will cap the upside in the market, considering that it will suck out some liquidity from the system? A 12,500 crore IPO from HDB Financial, a potentially large IPO coming from NSE, another potential large IPO coming in from NSDL. Do all of these IPOs ensure that the market does not, at least delays its charge towards those record high levels?
Absolutely, it does. There is no doubt about it. It's simple mathematics, right? As you rightly said, the liquidity will be sucked out. But I think what really sucks out the liquidity of the market and where tops are made is Basically, firstly, the market has to be really, really expensive, which Indian market currently is not. Secondly, there has to be exuberance in the market. By exuberance, I mean psychological exuberance. And that we have seen it again and again when we moved to 100% cash call in December. That is what we were witnessing. Everybody knew that the markets were expensive, but along with expensive market, if you can track how exuberance is there, when an IPO comes where everybody is like, I have to apply or I may miss the bus. I think that is not the case with HDB Financial. Maybe going forward, NSE will create it, will not create it, we'll all see.
Okay, surely. And, I think last time we spoke, Anirudh, also, you had spoken about autos, Nifty Auto. Doesn't that excite you? Do you think now it is something that will become attractive? Given, my main point is, given that, if the rains are fine, then at least the tractor side of the segment or anything on that front would you be looking at?
I think that is the only segment, as you rightly said, that's worth considering. Why? Because on the other side, there is a lot of problem. See, firstly, inventories are being built up. Secondly, going forward, there is very, very sure chance that we are going to face a lot of competition from the Chinese products. They are wonderful, wonderful products, and you cannot stay aloof from them for a very, very long period of time. Thirdly, the cycle for autos is like especially for the four-wheelers, they have a 5 to 6 year replacement period cycle. And I think that cycle is now behind us. So we are not very bullish on autos from here. So we do not take calls where we ignore a sector totally. But I believe since they are such cyclical sectors, I think auto is also a no-no for us right now.
What about some of these media names, Anirudh? If I could have the liberty to ask you about a specific name, that is Zee Entertainment. The stock was plagued with issues over the last couple of years with regards to corporate governance, with regards to its promoters. But now the promoters are increasing their stake in the company. It has also laid out very ambitious growth plans. The stock from levels of 90 orders come back to 140, 150. Do you see Zee Entertainment returning back to the days of old, or do you just believe that this is early days and it still needs to execute before we give it the kind of value that the market is currently valuing it at?
So firstly, I think we are not a buyer or we are not considering Zee Entertainment as well because of the primary reason is that overall structure of the industry that Zee Entertainment used to operate in has changed significantly. Yeah, everything has now gone away from to all these Netflixes and Amazon Primes and stuff. So, okay, Zee is a dominant player, but the time that it has lost in which it could capitalize is very, very difficult. And overall, I do not think that things can plague, when you're in a plagued industry and the company is also plagued, it's very, very difficult that until and unless a strong relative change comes in your favor, you are able to shoot out of the problem. So I think it's too early for the market to, value Zee at the valuations at which it is getting. But of course, the markets are never wrong. You should keep on tracking it somewhere. We know historically that the management has the capability, but was plagued with issues. If it can, companies have done it in the past. Suzlon has done it. A lot of companies have done it in the past, and best of luck to them. We are actively following Zee, and I think if it can mend its ways and get things in order, why not?
Absolutely, Anirudh. Thank you so much, for joining in with us this morning on the show, as well as giving us your thoughts and insights in terms of the markets, sectors, as well as individual stocks. So thank you so much for that.